Hey traders, welcome to Charts and Coffee. Hope everyone is doing well. Hope you had a good weekend. Happy Monday to everybody. All right. So let's dive into a couple things here as we kick off this week. Now, this week is going to be dominated really by one major narrative, and that is on Wednesday we have the FOMC decision on rates. Probably more importantly, the rate statement and the press conference. Those two things are going to give us insight into what's happening in terms of November and December. Remember, there's no real major decision being made in September other than the decision to let us as the public know what they might be thinking, right? The FOMC is largely expected to hold. Let me take you on over there. All right, they are widely expected to hold, which simply means that we're not going to see a change in the Fed funds rate. How expected is it? It's 99%. This is fully expected. Now, what's even more important about this is that the Federal Reserve knows that we as a trading and investing public are absolutely expecting them to do nothing. The Federal Reserve does not want to shake things up. They are, believe me, perfectly clear on what these target rate probabilities they are. They know when they're going against what's been discounted and when they're going with the flow of what's been discounted. And believe it or not, they really don't want to go against the flow because that's where they know the market shock is. Now, before that Wednesday meeting, we'll take reads on November and December. But I'll tell you what, ever since last week, where November and December expectations were almost neck and neck in terms of hike and hold, now you can definitely see that the hold, especially for November, is starting to put some distance from the hike. So it's looking like hold in September, hold in November, and then maybe a hike in December. Now, obviously, we're nowhere near the very last meeting of the year, December 13. And we have how many non-farm payrolls, how many jolts, how many CPIs, how many PCEs between now and then. And every one of those could move the needle and will frankly move the needle a little bit before we get to those meetings. But for now, based on what we know, which is always how the market works, based on what we know and then how that projects forward to what the Federal Reserve is most likely to say, this is what we are expecting. Holds likely through September, November, maybe one more quarter point hike. The fact that we're even expecting a 1 quarter point hike, 25 basis points, is baked into the cake. Meaning this is not, even if we were to get that hike, it is not going to be the undoing of the equity markets because we collectively as investors and traders have been discussing via the Fed Fund futures whether or not we're likely to see such a thing. So this is not a shock. If it's something we potentially see off in the horizon, we may not want it, but it's not a surprise, right? The market doesn't necessarily move on disappointment. It moves on surprise. And there's a big difference between the two. I can be surprised and disappointed, right? I could be surprised and elated, but it's the surprise that moves the market, not getting what we thought could be a scenario. All right, that being said, what are the paths potentially to the downside? I'll tell you what, Apple melted down last week. And yet here we are still standing. We see a lot of transports and industrials moving lower. And yet we are still standing. There's a lot of this equities market has basically brushed off and said, you know what? I know those things are happening, but the Federal Reserve is going to stop hiking soon. It's tough to be a bear, gang. And not only is it tough to be a bear, in terms of longer term expectation, it doesn't even make sense. Not yet. And when would that make sense? Well, one of the things that I talk about in the Sector Secrets Mastery, one of the things we've been talking about in the top tier outlook is, number one, we've been bullish all darn year long, right? We're not having any, calls for meltdowns and whatever else seems to have been it seems to have gotten a lot of traction throughout the this year that we're going to melt down. Based on what? This has been a rather bullish year. 2020, no, let's not use that measuring stick. That measuring stick is just really not realistic. But where we are, yeah, it's hard not to be bullish. As long as we're perched above the 200, those are the white dots on my chart. It's really tough not to be bullish. We've sunk down to some oversold support levels. Thank you, Slow Stow. Thank you, purple and yellow Darvis lines of support. We'll be looking for some buying opportunities in Apple. And I'll tell you what, the psychology of the beginning of a quarter is really kind of a neat one, right? We're going into the fresh quarter, right? We're not there yet. We had our quarterly expiration. We had our options expiration at the end of this month. We had the end of the quarter. Believe me, gang, when you are, imagine, let's imagine. You tell me what you think. If you're looking at the last quarter of 2023, you're going to be graded on the way you end the year more so than what you did throughout the year. And when I say graded, your clients, the people who you're managing money for, a lot of the people who move the size in the equity space, it's not necessarily retail traders like me or you. It's people who are managing a lot of assets under management, right? Millions, hundreds of millions and more. They're going to want to end big. What's the easiest way to end big? Find something that your clients would want and get it on sale. Do you think Apple might be such an opportunity? So when you start thinking about bargain hunting psychology, it's definitely going to be much more emphasized towards the end of the year and at the beginning of these quarters. So I look at Apple not only from where it sits, but from a timing perspective to probably be the beneficiary of some bargain hunting, right? And that's going to in turn help XLK, S&P, NASDAQ. So think about some of these cyclical behaviors. And yes, while September does seem to be a month that seasonally is bearish, please, gang, seasonals are not setups. They're just tendencies. And tendencies are not trades. Meaning, yes, there's a tendency to do something, but what would be the catalyst for such action? And remember also, seasonals are largely a commodities-driven type analysis, meaning things that are harvested. So I should say things that are planted, grown, harvested, transported, and stored. Things that are subjected to weather. That's going to definitely be where seasonals come from. Is the S&P subjected to weather? Unless the weather is the FOMC, to think about seasonals in the indices, other than end of quarter phenomena, the summer phenomena, the Santa rally, right, the end of the year, tax loss harvesting, window dressing, those kinds of things, those are more quarterly phenomena, right? What's the seasonal? Where I have weather, sun, wind, rain for corn, right? Planting and growing environments. Here, I have the Federal Reserve, and what's the monetary policy? And what's the behavior of managers managing large sums of money? That behavior is going to be different at the end of a quarter. So I hope that makes sense. All right, so let's get into the questions, gang. That's where I sit as we are wrapping up this Q3 and going into Q4. Good morning, good morning, good morning, everybody. Great to see you all. And by the way, I think the thing that then the overarching idea is if you're thinking, Rag, I don't know what's going on. Things are very choppy. This is not the uptrend we saw, say in June and July. And I don't know what's next. Hey, neither do I. No one can see the future. I love when people ask me, hey, where do you think the market's going to be in 3 months? Hey, what do you think all of the NFL scores are going to be coming this Sunday? And yet adults think this is a reasonable question. And that's the one question I will always rail against. If you're asking someone to see the future, you've lost reality, right? I don't know what the future is going to be. Nobody does. So when I accept that reality that I think most grown adults have, except for in the world of Wall Street, where we think people can actually predict what's going to be in 6 months. Hey, unless it's Jerome Powell giving me his S&P target, it doesn't matter, right? So what I want to say is I don't know what happens next because I'm an adult living in the real world. However, it doesn't mean we can't trade. Shorten the time frame. The more uncertainty there is, the more fog on the road, the more heavy rain falling. What do we all do? We slow down, don't we? All right, we can't quite see that far into the horizon. We slow down, and the equivalent to that, driving in harsh conditions, is shorten the time frame. 5-minute day trading, 1 hour swing trading. Shorten the time horizon. Don't demand that you project further out the potential follow through because we're simply not getting it, right? Okay. So with that being said, let's jump into Some questions here. Do I think there'll be any impact from S&P rebalancing? Oh, yes, of course. D. Bolton, there always is going to be some kind of impact from rebalancing. There'll be volatility. Things that are being reduced in weighting will be sold. Things that are increasing in weighting will be bought. There's always going to be some kind of impact. I don't know in the S&P if it's as dramatic as the reconstitution of what they call that for the Russell. I don't think it's as big a deal as something being added or removed from the index, but certainly yes, there will be some volatility surrounding what we expect to be lower weighting and increased weighting. But then again, we saw the weighting adjustments in the NASDAQ earlier, just a couple months ago. And what got hit the hardest? What gets hit the hardest? Those stocks we expect to be reduced in weighting, and those stocks we expect to be increased in weighting. But it's really funny. Things just sort of things leveled themselves out and went back to normal trends that were preceding that reweighting after. So it's really frankly more of a short-term trading opportunity than it is a long-term expectation for a shift in trend or anything like that. So it's really a shorter time frame window where the opportunity for that will lie. All right, next up, NVIDIA. We'll see what happens with NVIDIA. I won't look. It's a short term. It's a short-term move to the downside. Yeah, we'll see what sets up. Sure. Frank asked, do I know a platform in the UK that can aid me to trade my sector secrets? Frank, what I usually tell folks is if you don't have access to Thinkorswim, which is a really popular platform here in the US, which I understand those accounts are slowly being transferred to Schwab. We'll see how that all shakes out. However, my preferred way of letting traders know who don't either want to use TOS or cannot is use your broker of choice and use not Forex Factory, use TradingView. Use TradingView charts. They're broker agnostic. You can get access to darn near any symbol you want. You might have to pay some exchange fees if you want to trade futures. They open up their API to a number of brokers. So maybe your broker of choice, say an Interactive Broker, has opened their API. That's not really necessary. If you're looking for charting with my indicators and you don't have access or don't want to use TOS, TradingView is how we address that. That's the best way to go. All right. So that's the way we want to do that. All right. Next up is, let's see. I am day trading. Let's see. Oh, I love comments like this. I don't know why people think I don't read these things. Hey, you want to let Keaton know what we think of Keaton? Really? Don't you love your hecklers and trolls? Dude. Seek help. All right. I am just day trading and keep my money in my pocket overnight until we get back to the trend. I'm with you. I think that when we want to day trade, what we actually open the door to is having the ability to look at every single day from an AM and a PM view, meaning in the first thing in the morning, we can look at the open, heck, even the pre-market for my futures traders out there, right? But we can look at the morning, which is roughly 9:30 to 11:30. And then we can look at the afternoon, which my preferred afternoon window is 1:35 to 3:05. It's not the close. It's not the close. Yeah, not at all. Yeah, not at all. So when I look at the overall view, a day, sometimes the morning view is very different than the afternoon view, right? That morning view could be up or down. The afternoon view or trend, right, could be very different. So as long as we think about the midday doldrum, sort of separating the two sort of days that we have as day traders, it opens up more opportunity rather than presuming that we can continue to trend all day long, which is not often the case, especially in this environment. All right. Next up, Diaz, is there any impact for VIX expiration on Wednesday? Yeah, there probably will be some. But remember, in terms of waiting for Well, here's my take on market internals, and you all take this however it best serves you. Market internals are not weighted the way the actual indices are. So if I'm looking at the S&P, I've got about 7 names that make up about 20% of the weighting of the S&P. That means the other 480 sort of, and as you get further down that list, have less and less and less weighting. And yet, when we look at the market internals, they're not structured in that way. They're not weighted in a way that reflects that high concentration weighting in the indices. And this applies to the NASDAQ, the S&P, and the Dow, right? Those three are the most high concentration weighted sectors. The Russell's a little bit different. So ultimately, what we want to remember is if the VIX isn't really reflecting the weighting of the S&P, it's really not reflecting the S&P in and of itself. What it is reflecting is the opinion of the VIX, right? And I don't have any problem as long as we remember the VIX is not foreshadowing anything else other than the VIX, right? So if we don't start making huge expectations for movement in other indices based on it, we just look at it as the VIX reading. Now, obviously, if the VIX is heading up, I might look for a little bit more bearishness. But I will also say it doesn't mean that they're always in sync. If I were to look at the VIX chart next to the Dow or the VIX chart next to the S&P, if the VIX is a negative correlated indicator, if you will, it should look backwards, right? It should look inverse to the indices. And it doesn't always look that way. However, I will keep an eye at the extremes, the range extremes. So if we squeeze in the VIX and see where the highs are, because the VIX is almost always chopping, right? If I look at where the highs are and I look at where the lows are, and we look at those extremes, there's probably more to be taken from those extremes than actually trend, okay? Than the actual trend. All right, next up is, how do I tell if the DIA is a trade based on other movement? Trader Momo, the DIA, well, if you look at the DIA, well, let's start at the YM level, because before DIA comes the more 24-hour, nearly 23-hour futures contract. So YM to DIA, the indices are almost always going to be influenced by the sectors and stocks within them. Well, I shouldn't say almost. I shouldn't even hedge. They're going to be influenced by the stocks and sectors, none more so than financials. After that, tech. After that, healthcare. And then after that, energy. I would look at those 4, right? Don't worry about the euro. No, don't worry about the euro, which is just another way of looking at the dollar. Start with the composition of that index. What are the heavily weighted stocks? What are the heavily weighted sectors? If you want to do the heavily weighted stock discussion, really easy. I use a multi-chart, so a flexible grid that you can set up on TOS. All right. And here we have, there we go. Here we have the weighted stocks within the Dow, right? Here we have the weighted stocks within the Dow. And if we have stocks like this that are outperformers to the upside, Amgen, Cat, if we have stocks to the downside, McDonald's, Boeing, right away I know there's a push-pull happening in there. So that's one easy way to start building a watch list. Yeah, for sure. All right. Robert asks, XLF seems to be very choppy lately. Would I use a slow stow to day trade these stocks? We have been, Robert. Yes, one of my preferred ways to trade the financials has been JP Morgan, but I'll also take a look at Visa, MasterCard. Longer term, Berkshire and MasterCard have uptrends. Longer term, Bank of America is in a downtrend. So yeah, it's gotten a lot more choppy, but I'd say it's still bullish chop. I'd say it's still very much bullish chop. All right. So that's a wrap, gang. As always, thank you so much for being in Charts and Coffee. I will see you tomorrow. Same time, same station. And until then, gang, heads up. FOMC on Wednesday. That's the way this week's going to roll. I'll see you tomorrow.